The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock until noon. Next week or so, I'll also be trying to fill in for Larry. Larry Pesaventa is away, and I hope that I can do justice to his hour, and I will be here straight after my show for his Thursday show. So couple of things that we're looking at that I think will tell us a great deal about what's going on in the market. Get to that in a moment, but just two things. One is, thank you, Steve, for 2 great hours. Really important information that you give us, and of course, watching you go through the charts with your roads indicators. I think that that's great, and thank you. So what I'm looking at here, and the second thing is, if you go to the front page of TFNN, you will see there's a note that says, sign up now for my opening call. It's, if you sign up for the free trial, and this time we're actually, I've never done this, instead of 2 weeks, we're giving you 4 weeks free. It's a great value, and you will be learning the Chapman Wave as you do that. But if you sign up, you'll be able to come with my subscribers. A week from tonight, I'll be doing a webinar on the MACD, the moving average convergence divergence, or as a good friend says, MACD. He calls it the MACD. I like the MACD. And the slow stochastic. I consider them to be extremely important tools in my Sears and Roebuck huge toolbox. You never know when you're going to need your different tools, but I use these a lot of the time. Of course, I also work with a naked chart. That is a chart that could have just candle bars or not even candles. I look for the high and the low. For the Chapman Wave methodology, I go from the lowest low bar to the highest high bar, and usually the objective is to get you from the bottom to at least a peak D, 4 higher peaks higher, and I call them uppercase letters, capital A, B, C, and D. When you get to D, different things can happen. Look at the E-minis. Goes to, this is the June contract, goes where? It goes from the low of 17, somewhere around 1725 to 1880.50, and it makes a doji candle right there on the 7th of March at 1880.50. It pulls back. It forms this pattern. It looks a little bit like the Chapman Wave falling axe, but actually it's a traditional flag pattern. And if it breaks decisively above, then it should go to the 1875 high of the 11th. And if it takes that out, immediately you got to think, oh, yeah, we're going to go test the old high. Well, the old high is just recently at 1880.50. But if it fails and goes under the 9-period moving average, especially if in the next couple of days it takes out 1846.75 and the 120-minute chart is making the arch formation at a perfect test of the 200-period moving average in a perfect left side to right side price time match, in a perfect arch formation, it's made the H that turns into an M pattern. If it continues sliding like this, that'll be a failure pattern. MACD still okay. Stochastic is turning down, but it is over 81%. So let's go through the numbers. The Dow is down 43 at 16,297. The S&P is down 3.8 at 1864. The comp index is down 13 at 4310. Remember, yesterday the comp index was leading to the upside, which allowed for that last hour bout of strength. It didn't go to the high, but it certainly was a bout of strength into the close. And that's really not very bearish action, because after 3 days, having made a peak F in the Dow, you would anticipate that the third day should be a good close underneath the 9-period moving average instead of sitting right on it. But I'll go through the scenario in a moment of why and what and where. So let's go on. We've got gold. Now, you remember I had this discussion yesterday with Audrey. We were looking at the GCM. That is the June contract of gold. And I said we are within 5 bars or something like that of making some kind of a... Where did it go? Where did I just lose? Why is it a daily chart? Oh, that's a mistake. All right, I messed up over there. Let's put it over here. GCM 14. What I was looking at is the pattern with the leg, the body, and the Chapman wave stalk leg formation makes the neck extension. That forms the head, and then it should make the beak, and the beak should come back and test under 1335. We don't know if that's going to happen, but look, I had said we were right here when this was occurring in that leg C yesterday as it broke out and was heading to 1374.90. Well, you got a little candle following that in the 120-minute chart. Then it went to a D. Then it tested the 9-period moving average. Then it popped up to a doji high of 1375.70. And then what happened is this morning started to come down. It's under the 9-period moving average for 2 bars. This one is testing the 1370. The 1368.50 9-period exponential moving average, and the gold right now is at 1369.40, down $1.30. I've got. I'm a bit delayed here. It's really down 240, so it's underneath that 9-period moving average. And what I'd said is there's a real good chance that we're making just a short-term top. I'm not sure if it's going to be a 3-day pullback, a 1 to 3 day pullback. My suspicion is it is going to be a pullback, and that it could be turned into something a little deeper, but the weekly chart is still very strong. Silver is down a little bit. It's down 12 cents at 21.20. Platinum is up 4 at 14.79. High-grade copper is up over 2.90. It's at 3.01. Woohoo! But it's still down 90 cents. Crude oil is at 98.38, up 40 cents. And bonds are up 12.30 seconds at 132 and 17.30 seconds. Dollar's down 23 cents at 79.37. Euro is up at 10. And I'll go through a lot of the stuff in Larry's hour, because that's kind of what he does in the futures hour on a Thursday. So now let me do a couple of other things. I said to the den that I would do a quick, I do a lightning round just for fun, just to kind of break up our usual, the normalcy of what we normally do, and I'm gonna change that in a moment. But first, I just wanted to talk about the. This is what I show my subscribers to my opening call, and this is one of the reasons why you might want to think about signing up. It's free. I mean, you got a month free. You also get a webinar for free. It's a no-lose proposition if you just think of it in financial terms. So this is what my subscribers get every day. You see that pattern, the stalk leg formation? We already did that once. We did that over there with a huge leg going up to the oval high on the 7th of November at 15,797. That pulled back. And pull back, and then it started the neck formation. That neck formation went all the way to a peak D at 16,174, and then it came down, and that's the beak. The beak is there. See, that's the pattern right there. I've given you I used to have a clarinet student years ago when I was when I taught music. Let's see. Schematic. He calls it schematic. There it is. The Chapman wave stalk leg template schematic. Chip is now a physician with a couple of kids, and it's amazing how time can fly. He was a lovely musician too. He sang very well, played clarinet very well. So what we've got is another formation like that forming right here. There's a chance that if the 16,260 low of the Dow gets taken out, that MACD will finally cross negative. The stochastic's already negative. And as my subscribers know, we've already been putting on short positions for over a week already and adding to them, taking profits in some. This is the time. If ever there was a time, this is the perfect time, mostly because of the daily, weekly, and because the monthlies are suggesting that a number of these stocks and indexes are quite toppy at this particular point. If we're wrong, we've got fairly tight stops. What can I say? So now we're going to go to the lightning round right now. First question was UBNT. UBNT. I remember this one well, but I can't remember. Oh, Ubiquity, I bet. Yep, that is it. Ubiquity Networks. Leg D in the monthly chart. Very strong. MACD stochastic. Nothing wrong there. Ubiquity Networks. I suspect that this is a network company. I mean... It's everywhere, the ubiquity of it all. Now, I've had a change of notation. I've got a G/C. My emphasis is actually more on the C than the G because it's recycled, and I'll show you exactly what I've done. I'm calling this a top. I'm calling this a restart, and and I'm saying that this is a really good chance that in fact is A, that in fact is B, and that is C. And one of the things I was hoping for, I like this stock very much, is that the pattern that I had drawn of this this symmetric wedge formation or triangle formation would see a pop to the upside. I think I spoke about this the other day, or I can't remember. But I was saying that there's a good chance if it breaks 51.60, it might get to the top to test the D at 53.58. But I thought that it really depended on how it broke that. Well, yesterday I didn't see it, but yesterday it broke to 53.02, and today it's gapping up, and I have to call this leg E. Now, I'm calling it leg E. But you see, inside here, there's an A and a B. So this goes to the heart of the question of the Chapman wave. What do you do in certain circumstances? Well, the concept of the Chapman wave methodology is that over the 25 more years, or whatever it is, that I've been working at it, the idea is to be able to articulate every single nuance, every single little blip and turn up and turn down. But of course, you can't expect one particular system to be able to do it all. But wait a minute. It does a tremendous amount because that is, in fact, a down arrow. Why? Whoops, let me get it back again. A down arrow because UBNT trading at 54.39 up $1.93 back on the 25th of Feb made a high of 53.58 leg D. The next day, it makes a little doji. It was a doji candle. The next day, it makes a small doji on the 27th with a high of 52.75. And then what happens is it makes a slightly higher high the next day, but not an all-time high. And then it tumbles and it plummets down to the 43.79 level. So a down arrow had to be there because the MACD turned down, the stochastic turned down. But now the speed with which the MACD has quickly crossed positive says there's a chance that we might have started a new buy mode, or it's a continuation of the old one, which go to an E and an F. It doesn't matter. You don't even have to think about that. What you have to say to yourself is this good action? Is it complementary with the 120-minute chart, which is the shorter time frame? It's the middle chart between, say, a 60-minute and a daily. Of course, the best one is really the 300-minute, and it's still looking quite good. I'll deal with it. We'll go. It won't be a lightning round. I'm going to spend a little time on this, but we're looking at UBNT, Ubiquity Networks, Basil Chapman, Time Conditions Hour. Love to take your calls, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, we are back. Basil Chapman, Tiger Technicians Hour, and I'd love to take your calls at 877-927-6648. Now, just to real quickly finish up that Ubiquity, UBN, what is it? Let me find it here. UBNT. Yes. So far, if you're long, I'd say stay long. And what I would do is I'd put a stop on some part of it. It's at 54.40. Put a stop somewhere on a portion of it. I would not like to see it break down here under 52.27. So some part of it should have a stop there. If you haven't gotten in, this is not the time to be jumping in on a stock like this, especially under market conditions like this. So do me a favor. I'm not sure whether you're long, but if you are long, core position, if you're long from much lower down, it's looking very good, but it is getting somewhat toppy. So I'd start skating off on a pullback. That money I would put to the side, and I say, have patience. See if it comes back over the next 2 weeks to the 44 to 40 area. That's where you want to consider. That sounds like a lot. But if we go into a bearish phase now, this stock should be dragged down later on. So keep your core position. I wouldn't add to it. I'd only add to it if it pulls back between 50 and 50, 52 and 50 over the next 3 days. And then by Tuesday to Wednesday of next week, if this is holding really well and the market's pulling back and it's still in that 52 to 53 area, I would say you could actually nibble a little bit, because any relief rally in the market, this thing should fly. The monthly chart looks very good. Weekly chart, inlay, I'm giving it the favor of C, so I suspect there will be a pullback, then it'll go to D. Nice looking chart. One of those on my list that I've missed before, and I really do like. Let's go to Ari in Arcadia. Hi, Ari.
You doing, Basil?
Ari, yesterday when I was discussing in great detail, I don't know if you heard it, the gold chart, I didn't realize, but when I looked at my emails soon afterwards, I had an email from someone who said, I wonder if I can find it, because he said it so nicely. He said, a big compliment to you. But what he said was, there it is. He said, "Hi, Basil. Was waiting for Ari to call on RGLD. That was yesterday. So what happens today? We've got a call from who? Ari in Arcadia. And what does he want to look at?
RGLD.
Very good. People are getting to know you, and they respect your opinions. So, Ari, you have got a beauty. This is a Royal Gold. It's a royalty company. Just, I keep waiting for this thing to come down, and it won't come down. Yes, for 2 days, the gold stocks were not really not all the gold stocks. Just a few were participating in the rally. Today, we've got something completely different, and I'm looking at this, and I'm saying it's F/B in the daily chart. That's, I don't know what you've got for your Chapman wave count, but I've got F/B because it recycled when it broke out, which would look like an E on the 3rd of March. It went to 70.44, held the 9-period moving average. Now, the MACD is turning up, but it hasn't crossed positive, and the stochastics at 77, but did cross positive with a very nice expanding beta, the difference between the fast-moving average and the slow-moving average. I've got this in a leg D in the weekly chart, but it's only in a leg B in the monthly, and the way this leg B is looking, I have to turn around and say to myself, Basil, are you sure that gold is going to go down to lower lows later on when something like a Royal Gold has come back almost 50% from its 100.71 high and 38.63 most recent low? And the answer is that this is a very selective rally in many cases in many of the gold stocks and the silver stocks, and Royal Gold is certainly one of the very best in the group. So, Ari, what are you doing?
I don't know. I'm kind of trying to get a correction on the daily, but it's just impossible. You know that all it does is consolidation.
So the attitude you've got to have when you're under these circumstances. Well, first, you do have a position, right?
I have a good position.
Yeah. So the pullback would be something that you would start to consider, maybe even adding to it, and it's not giving you a chance. Now we know with stocks that
I would like to sell some on the pullback and then buy it on the bottom of the correction.
So, okay, if you are open to taking profits, this is the only way I'm going to suggest it, because it is very strong in the weekly chart, and it means that and even the 120-minute chart is just broken out A, B. I hear music in the background. Yeah, this is leg D, and it's got a Chapman wave squash pattern between the MACD and the stochastic, which I'll be teaching to folks a week from tonight in the free webinar for subscribers. Ari, give me a second here. I want to look at this in a little bit more detail, because I want to open the charts up nice and big so we can get a much better perspective. Folks, the Dow's down 70, S&P's down 6.5. We're on with Ari looking at Royal Gold.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Well, folks, we're back, and the Dow is really having a tough time. It's down 68. Now, this is bear market action. When every single time there's something that resembles kind of good news, like this morning with the jobs, etc., or the market was oversold yesterday and it had this last half hour rally. There should have been follow through, which there was last night, but it should have followed through even bigger. Should almost have doubled from the +6 futures S&P last night to about a 10 or a 12. And it just can't do that. So I'm watching this really closely. To me, this is very negative action. We just heard the commercial for Harmony, and Harmony is acting real well at 365 up 11 cents. What it was once upon a time in the 15s, and went down to the 2s. But this is very nice action. So let's go to Royal Gold again. So Ari, this is what I'm thinking. Because it's acting so well, if there is going to be a pullback in Royal Gold, RGLD up 92 cents at 71.42 right now, my thinking is that it's going to be one of two things. It's either just a sudden plunge in gold. It could be anything. It's just out of the blue. Gold just suddenly pulls back very sharply. I'm suspecting this is the moment that it should be doing that, and you've got the catch up in the gold stocks themselves. Or, well, I guess there are three things. It's either going to be sudden, and that will say that the gold stocks some of them have had a very nice move, some of them have been lagging, pull back, and then we're going to see if the dollar rallies and if the euro. I'm going to go a little bit more into it in the next hour when it's Larry's show, because that's kind of more along his lines, because the euro is in leg E in the daily, leg E in the weekly, and leg E in the monthly. But the monthly might in fact turn into a breakout. I don't know yet. other than to say a very quick C to D to E in monthly charts says, hey, be careful, because there could be not a major turnaround, but there could be another pullback coming very soon. So here's my thinking. You've got very good profits in Royal Gold. The fact that you might even want to short or to take some profits and then put that money back, I think that's very good money management thinking. But don't push the envelope because it's telling you that it's acting very well. I'd rather put a stop in, and it's at 7142. A 2-point stop, I don't think is a big deal if you're anticipating that, certainly I would, that if it closed under 69.40, 2 points lower, then there's a real good chance it's going to test the lows of 67.40. If it tests that, there's a good chance I've got a sideways consolidation range between 67 and 65. That would be the area that you'd have to consider if there is going to be a pullback and the technicals and the weekly remain very strong. That would be the worst case scenario that I'm looking at before the weekly can go a little bit higher. So I don't know if you want to just put a stop in and say, hey, make it a trading stop. It's a 71.45. If it gaps up tomorrow, you've got your trading stop. It's still 2 points that you're going to give it. Something like that. Or you would just say, based on the 120-minute chart, this is an A, B, C. This is leg D. Any further gains, I'm just going to take my profits right there. Why give up 2 points? And if it goes higher, I've got a core position. But at least for money management reasons, I'm selling on the way up and getting the best price that I choose. That's the only way I can think of it. Otherwise, I'm saying to you, just have patience. There will be a pullback. I don't see anything yet. It'll have to be maybe a doji candle tomorrow, and then a Friday, and then a sharp overnight pullback Sunday night into Monday. That's the only way I can see it, because that 69.48 9-period moving average support is pretty strong. I don't know if that suits your plans, but I don't want to force an issue that isn't there. In other words, I would take money out of Royal Gold only because it's reached a certain criteria. You feel it's getting a little overextended, and you would like to hone in, get and capture that particular profit on that particular position, and then you can say that's the money I'm going to dedicate to put back 4 points or 5 points lower, and that's the only way I can see it. Look, even now it's at the high of the day. It's catching up to what gold was doing, and that's what gold stocks tend to do very often. So I hope that helps you.
I appreciate it, Basil.
So, and congratulations, you really nailed this. You've done a very beautiful job on the way down and now on the way up, and I bravo. We all congratulate you. Thanks so much for calling, Ari. I hope that helped you.
Thank you.
Thank you very much. So, folks, let's just do another little thing here. I wanted to I'm going to spend a little more time in Larry's hour going through the commodities and stuff like that. But in this particular moment, we had a question on, did I finish that? I just want to finish the UBNT. That's the ubiquity. It's almost the same thing here. If you're long, in leg I should have put E/C. I meant to do that. E/C in this stock, I would say it's above the previous high. It's a very quick turnaround. It's got a little V-shaped pattern to it. This is where it becomes somewhat extended. It can go higher, but I would definitely want to take something off UBNT if I've had a core holding. If this is just a brand new position, you're playing a quick trade, I would put a real tight stop under today's low. I actually wouldn't even do that. It's at 54.21. I'd make it 53, 54-ish, somewhere around there. I'd say, hey, you take that out today, there's probably going to be weakness tomorrow. So that's what I'm looking at. But monthly and weekly are still looking really good. So core position I'd hold. I'd take a little bit off. Now, the next question I had, and I'll show you what I can do for a lightning round. I haven't seen the stock before. Flim Flam. What is it called? It's called Flamel Technologies, ADS. Very strong leg C up in the monthly chart. MACD and stochastic are very good. Weekly chart is starting to show signs of deterioration, and it's made a peak F at 11.48. It's trading right now at 10.49, down 2 cents. Now, this is going to be very important. There was a peak made at peak D at 11.48, with opens at round number 11 on the 15th of January. It plunges. This you have to call plunge because it went down to 8.06. That's 3 points. That's 20-something%. Now it's up at the 10.49. You know, can you look at this? The weekly chart showed you exactly what's happening. Look how it's making a narrowing, going to the apex. It's making a narrowing series of closing points. I'm going to take it all the way from there. See this right here? And what it's saying is, I'm having more and more difficulty going higher. Yes, there should be a leg D. If you're long, I don't care about the short side on the 10.49 stock, because I don't usually short stocks like this, but I would just say to you that if it takes out the low of yesterday, be real careful because it's going to test 989. But on the long side, what I'm saying is it has to take out yesterday's high of 1074. If it does that, it could go to a leg D, but it's trapped in this rectangle right there. So if you ask me, would I go long, would I go short? I say, you know what? I wouldn't touch this right now. FLML, if you are long, just put a real tight stop in. Not even 20 cents below what it is at right now. But if you are thinking about it, keep thinking about it. Don't do anything. So that's that one there. And the next question was, would I go through the monthly charts of, let me find it here. It was XOM was first. XON with an N. XON, I also haven't seen a chart like this. A chart called Intrexon Corporation. I'm not sure what they do. IPO'd, and then a strong leg from the 16s all the way to 38, high round number, 38.50, all-time high, pulls back very sharply. That makes me very nervous. Weekly, the same thing. I would say that this is a stock, if you're long, and certainly I think that's the way someone's looking at it, just make the stop 27.90, 28.02 is the 9-period moving average. To tell you the truth, the way it's acting right now, very struggling to make each higher peak and then giving most of it back. Here again, I just be kind of very cautious. If you are long and you're long from the 26 to 27 area, fine. I would say I would not take a portion off. I take the entire thing off if today it took out 28.92. That's just the way I'm looking at it. 28.92 says, uh-oh, it's going to pull back to the 28.02 level and then have a tough time getting to a leg D. So if by the end of the day there's just a turnaround in the market and this thing is starting to trade at 30.23, XON for Nelly at 29.34, and it pushes up to the 30.10 area, I say, great, raise your stop. You absolutely want to see leg D at 31.25 and higher, and then it's got to continue. It can't do this up and down stuff. So here again, weekly charts improving. I think it needs time, that's all. So that was that. And okay, here comes the question. And the question was, would I look? Okay, here we go. The S&P monthly charts, Dow S&P Index, sure. And I do have to thank, the Denners and folks that study the Chapman Wave methodology. I have to thank them. They're always keeping me on the right track. There's a question, was that a D or an E in the diamonds, which is a divergence between the Dow? And the question is a great one because it is. I missed it. I had a line crossing it at the time. I couldn't see it. It is a leg E in the diamonds. And this is going to be really important in my thinking. So the Dow daily has made a peak. I believe it's a peak F. Everything about it is looking like a peak F at 60,505 on the 7th. Just checking, yep, the 7th. Weekly chart has made a V-shaped retracement, but it hasn't made a new all-time high. Got to be real careful with these V-shapes because they could pull back a good 15 to 20% from the recent high. They tend to do that sometimes in the weekly charts. Now it's the monthly chart. I've got the Dow still at peak D, and 15,758 is the 9-period exponential moving average support. But let me expand this so that you can see what I'm looking at. That series of trend lines right there, I'd circled it before, but it was getting messy. The Dow has to break decisively into the 16,850s to 16,920s to get away from these trend lines. And then the up channel kicks in. And that up channel is beautiful because that has an up channel resistance line in the monthly. This month it's at 16,952. Next month it'll be at about 17,020. So that's what we're watching at. And I suspect we're just in for, we've started a consolidation. So it's peak D made already in the Dow, but the S&P has extended higher this month, and it's leg D with a potential for a pullback. But even more important is what happens after a doji candle. If in April, if it really is a doji, if we actually close the month somewhere around here on the S&P, that's the whole month. If we close around 1862, in a way that's positive, in a way it's negative, and that says a decisive close strongly above the high of this month, if 1833.57 is the high, is very positive, and a close below the low of 1834.45 so far, if that is the low of this month, that says be careful because we could be coming down to 1769. My reading right now says the MACD is getting a little tired, but it's still good. The RSI is making lower highs. The unbalanced volume has had a very nice breakout, but what it does at the end of the month is going to be very important because it's an M-shaped pattern, and the stochastic is pulling back, but still very strong at 93%. So that's the S&P, and the other one was the NDX, was it? Yep, the NDX, NDX.X. The NDX, which is the NASDAQ 100 index, has made a new all-time high. It's in leg E. MACD is even stronger than the S&P's MACD, and the stochastic is at 95%, even stronger than the stochastic of the S&P. So all that I can say is that if there's a close on any weekly basis, any Friday coming up into the last week of the month, so that last week of the month will be the 28th of March. So on the 28th of March, on any Friday, if there is a close in the NDX under, it's at 36.91, under 30, around about 35.80, I don't know the exact figure now, I haven't calculated it, that would say be careful. Well, first of all, 36.35 is the 9-period exponential moving average in the weekly chart, and I have a signal, 4 signals to say that this is probably a topping action. Be real careful on the upside because it's looking as if this is a peak D of consequence. In fact, if the NDX closes decisively under the 36.87, 36 being covered, I can't see it, 36.97 level by tomorrow afternoon at 4 o'clock, especially if it's decisively underneath, that would say real good chance that I have to put a down arrow because the MACD's turned down. Stochastics were at 61%. I should put it in now, but the day I don't do that. It's a daily chart. I can't make changes until 4 o'clock today. So that's going to be very important. How would it break out? Obviously, if it took out today's high and then immediately followed by taking out 2 days ago, the high of 37.25. So far, this is very negative action on the daily. Weekly is just suggesting that it could be negative action. I'll be right back straight after these messages. Dow's down 71, S&P's down 6.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Just had a quick question. Yes, the ETF, the IWM, which is the Russell iShares, Russell 2000 iShares, leg D up, hitting resistance in the monthly chart. MACD is very strong. Stochastic is just turning down, but still 92%. The weekly chart is in leg D. That's the way I've called it with that instant restart back at 111.62, week of the 1st of November. So this says there's an alternate count. It also says that I don't know if it's going to work, but this is a technique that I teach for my Master Trader in my Master Trader series. It's called the flat-based restart. And what it says, I'll do it the most conservative way, I'll extend this out. It says that there should be a pullback, and that pullback in the weekly chart should take the price back and underneath at least 107.27, actually 107.14 is the number to look at. So that's 11 points. So 11 points. That means it gives back all the gains that it made in February. I don't know if this is going to work out, and it takes you to about sometime in the middle of May, maybe late April, middle of May. I'm not sure. It depends on the speed. But I'm going to leave that for the moment. Just say that the daily chart, everything about the daily chart says it's made a peak E at kind of a double top at 120.58 on the earlier than the others on the 4th, and then on the 7th it just missed at 120.47, and that says that it should at least test the low of 115.58. That's the way I'm looking at the IW. Then FLT, a question about FLT. This is Fleet Core Technologies. Now, I've got this as leg C, possibly peak C this month in the monthly chart. No problem. I've got this as leg C, peak C in the monthly chart, weekly chart, and that weekly chart says, think it through again, because here as well you might have an instant restart, what's called an unconventional flat-based restart. So you need to do a little bit more homework on the weekly chart. And all I can say is that the MACD is deflecting lower. The stochastic is having that look that says within 3 or 4 bars, it's gone above 80% and then below 80%. That's a very negative sign. So this does not look like a C to me. Everything about this says that it looks like it's either a right arm extension or a rogue wave, and that it should give back everything in that pattern that I call the Eiffel Tower, that goes straight up, straight down, capital A, looks like this, and I always put it right in there so that you know what I'm talking about. This time I've made it red, make it 36. There you are. And this is what I'm looking at. There's a good chance that Fleet Core is going to give back, and it's going to go way back down to there. So that's the way I'm looking at it, and that makes me say, later on today or tonight, if you have a chance, restudy your right here. I think I've got a potential for a unconventional flat-based restart. If that's the case, then we're looking at 80. No, forget that. No, I have to do it. That's what you'd be looking at if that's an unconventional flat-based restart there, or if it occurred somehow or other right here, that would be 100.30. So I don't want to do anything extravagant. I'm just saying, let's see what happens here. If within a week it has not taken out 116, but instead is trading between 124 and above today's higher, 129, then it will make the D. At this particular point, my suspicion is it's making the Eiffel Tower pattern, certainly doing that in the daily. So the daily's made a peak D at 132.22. So folks, if you're signing off now, I am going to be staying on for Larry's show. So let me just do this real quickly. If the Dow closes ugly like this by the end of the day, I'm calling that a peak F with a down arrow, and that's time and price to the downside. That would target the 16,071 low of the 3rd of March. So far, it's not a very good day. And the semiconductor index made that leg D. I'll go through more of this during Larry's Hour in the next few minutes. I'll be back soon.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.